Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me as always is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
It's, not the best situation globally in terms of sentiment. You're seeing selling across risk assets in several parts of the world. But India once again seems like it could be a bright spot.
Absolutely. And with the downgrade that we saw by Fitch on US, the global markets were under pressure, second consecutive session. And the anticipation was, Alex, that today we will see some bit of pressure in terms of opening session. But apparently it seems that with the upgrade that Morgan Stanley has given India, it's going to be an opposite reaction altogether.
It could well be. It could in fact well be. Of course, overnight you saw selling in the US on account of very strong jobs data, which puts additional pressure on the Fed, remember, because all expectations were that they've come to the end of the line when it comes to those rate increases. So a very strong jobs data puts a question mark there. And of course, the play out of what you saw with regard to the Fitch downgrade across all risk assets, as I mentioned. But then what Hiral was just mentioning is that Morgan Stanley has upgraded India to an overweight rating, and it has in fact risen from number 6 to number 1 in their process, with relative valuations, according to them, less extreme than in October. They've said that in a multipolar world, trends are supporting FDI and portfolio flows into India. And they've said that India is adding a reform and macro stability agenda that underpins a strong capex and profit outlook.
Absolutely. And a downgrade coming in on a China as well,
Yes.
right? So that's something which really augurs well with regards to India. So let's see how tables turn, because Gift Nifty is something which will give us some bit of direction in terms of today's market. But clearly, Alex, yesterday's session, an absolute roller coaster ride for the Indian markets as well, right?
Yeah.
The opening session was absolutely dominated by the bears. However, there was short covering that was seen in the dying hours as well. So that last hour of trade actually saw a short covering rally that did come in. In fact, after a very long time, the Nifty has closed below the 20-day SMA, and 19,450 comes to be the immediate support for all the bulls as well. There could be a pullback rally, towards 19,580 to 19,600 if you're able to sustain those 19,450 levels in trade. However, if we break 19,450, then there is fresh selling pressure that could be anticipated in terms of Nifty 50. From a short-term perspective, yes, there is weakness that is persisting, and that's what the indication is. Bank Nifty as well, in fact, has closed below its 20 DEMA for the first time since the 26th of June. And the support is coming in at around 44,400. So watch out for those levels pretty closely. The FPIs, interestingly, have been liquidating their long positions, Alex. And this is for a fifth consecutive trading session. That's the phenomena that we've been witnessing. If you see the long-short ratio, that has fallen from 73% on the 6th of July to almost a 51% on the 1st of August. Put writers have been exiting those 19,500, 19,600 and 19,700 strike. And now the resistance has shifted lower to levels of 19,600, and this is mainly on the back of the strong call writing that we were witnessing. So any close below 19,422 or 24 can lead to more, liquidation in terms of the longs and initiation of fresh short positions. So this is going to be an interesting time to watch out for. And as you've been speaking to a lot of analysts yesterday as well, this is going to be a phase of consolidation. There could be somewhat selling pressure, but the kind of bounce back that could come in from there is going to take us to those 20,000 levels. And analysts are indicating somewhere in that October or Diwali kind of a time frame where we could see those numbers.
In fact, you were talking about 19,420. CK Narayan was pointing out 19,380 or thereabouts that he's looking at, which he pointed out was the first previous swing low. But clearly, this is exactly what a lot of analysts are pointing to. We've got an action-packed show, and we're going to start with earnings right off the bat here. We're going to talk about Titan results, which came in post-market hours. Cesar is joining in with some more details there. Cesar, the headline for me was that the profit number missed estimates on the back of higher costs. What can you tell us about the fine print?
Right. So Titan's numbers were mixed. Its profit came at about 18 to 20% lower than expectations. This was due to a significant miss on the EBITDA margin. Now, the company has attributed the miss to higher advertising and gold price correction. However, as per the management, this was more of an outcome of muted consumer sentiments rather than competition. Now, despite the miss, Titan has maintained jewelry margin guidance at 12 to 13%, which is comforting. Now, coming to the revenues, Titan has delivered 26% growth over the previous year, and this was driven by a double-digit growth across its key consumer businesses. Jewelry sales were up 22%, watches and wearables saw a revenue growth of 16%, eye care rose 11%. So now, going forward, the management expects the revenue growth to be higher than the EBITDA or the PAT growth, in the next few quarters.
Thanks, Isa, for getting us the details. In fact, all our eyes are pinned on the consumption space over the next couple of months. In fact, we will come back to you for Dabur as well. Please stay with us. But before that, let's go ahead across to Mika, who has a lot of other earnings that have been in focus. In fact, Mika, Saloni, as well as Varsha will be getting us earnings. Mika, what's on your list?
So first we have Gujarat Gas that showed positive growth but missed the Bloomberg estimates. The revenues and net profits were both up. However, EBITDA was down 36% and the margins had degrew too. The board has also approved a 100 crore equity investment in GSPC LNG. The company Gujarat Gas will then gain 7.89% control in the target company post the acquisition. The acquisition is supposed to be completed in 30 days and it aims to have better synergy and integration gas value chain. Next, we have Fusion Microfinance that showed a consistent quarter with growth across all metrics. AUMs grew by 31% and PAT grew by 60%, with an uptick in NIMs by 32 basis points quarter on quarter. Their customer base also increased to 36.4 lakhs this quarter as the company continued to add new clients. Then we had KSB Limited that showed positive numbers throughout, with revenue was up, net profit was up, and EBITDA margin was up. Margins to improve from 14.41% compared to 13.63% in last year. Then we have Kirloskar Ferrous Industries that saw a marginal revenue growth at 0.57%. Net profit was down 8.96% and EBITDA was up 20%, and margins also improved to 13.87% compared to the 11% metric last year. Then we have Keval Karan Clothing that had a 15.44% revenue growth and a 56% profit growth. The non-retail channel was responsible for 57.4% of the sales this quarter, while retail was responsible for the remainder 42%. Sales realization stood at 660 this quarter, and the jeans product was responsible for 54.6% of the total sales contribution this quarter. And lastly, we have Pradeep Phosphates that recorded a 25% revenue growth. However, the company had an EBITDA loss of 38 crores and a net loss of 199 crores compared to the net profit of 62 crores last year.
Interesting. Thank you so much, Mihika, for that. And here, interesting that there are pockets of strength. There are a few names that stand out every day on account of earnings, among other things. And in fact, if you think about it, the Nifty 50 still, after yesterday's slide and the last couple of days, only 2.5% or thereabouts away from all-time highs. So that could play a part. But let's continue to look at earnings. We've got Saloni joining in with more to talk about. Saloni, what do you have for us?
So first we've got Globe Aviation, better known as Indigo. So the Q1 results posted by the company were extremely positive and beat Bloomberg estimates. The great growth seen in the top line and bottom line both. The expenses of the company saw a decline mainly along the lines of the decrease in aircraft fuel expenses. The company has also seen a rise in both the total cash and debt by really good margins. Next, we've got Metropolis Healthcare. So the company witnessed a drop in its top and bottom line while missing the estimates. While the revenues from the core business saw growth, the revenues from all other segments saw a decline. Third, we've got HPCL. So the company posted its decadal high quarterly standalone profit of rupees 6,204 odd crores this quarter. While the revenue of the company saw a decline as compared to last year, so did the expenses by a much greater margin. HPCL also saw exceptional physical performance this quarter. The company processed its highest ever crude throughput during April to June and also achieved its highest ever quarterly total sales volume that represented a growth of 10.7% over Q1 of the last fiscal year. And lastly, we've got VIP Industries. So while the company saw growth in its top line, it witnessed a significant decline in its bottom line. The drop in the net profit as compared to last year was due to an increase of approximately 75 crores in the company's expenses.
Thank you, Saloni, for getting us the details. It was interesting to see VIP taking into consideration as how Safari posted numbers. But Indigo, as well as the other aviation companies like a SpiceJet will continue to remain in focus. So please watch out for these counters pretty closely in terms of opening session. A whole host of other numbers that have trickled in as well post-market as Varsha standing by with more. Varsha, what's on your list?
Good morning. So we've got a bunch of companies. So number one is Narayana Rudale. So now the numbers were above estimates. And the good thing about hospital sector is once your capex is stopped, then your profit goes up. Okay. So in case of Narayana also, they've stopped their greenfield capex, and now the numbers will be good because the depreciation will go down. The other company that we have is Mankind Pharma. Now, the numbers were again above estimates. Revenues were up 18%, while EBITDA was up 44%. And that domestic business actually achieved a robust 14% year-on-year growth. Plus, the export business also witnessed a growth of almost 214%. Now, due to certain one-off opportunities in the US, also the company has got number one market position in Manforce, Prega News, Unwanted, 21 Days, and Acnista. The next company that we have is Sheela Foam. Again, the revenues were down 8%, but net profit was up 2%. Now, the growth drivers include emerging Indian B2B opportunities and B2C opportunities, also their Australian furniture and mattress business. And the board also approved raising up to 1,200 crore via QIP, and it has approved raising of 600 crore via private placement of for non-convertible debentures. The last company that we have is Vaibhav Global. Now, revenues were up 5%, net profit was up 51%. Now, Vaibhav Global is into what Naptol is in India, but Vaibhav Global operates in US and UK and Germany. So recently, I mean, in 2 years back, so they've entered into Germany, which will turn EBITDA positive in H2 of FY24. So the numbers will really pick up from H2 FY24 due to the Germany impact.
All right. Clearly, lots to talk about. Thank you so much, Varsha, for getting us those updates. We're talking about Dabur next, and in fact, we've got Sessa standing by. Sessa, going straight to you, we've been speaking about consumption from the start of the show. What is expected on Dabur?
Right. So, in its quarterly business update, Dabur had estimated that sales in the June quarter would increase more than 10%, led by its healthcare and personal care portfolios, even though the beverage portfolio was impacted because of unseasonal rains. And that's been a trend across the industry. We have also seen HUL talk about it during its earnings. The healthcare business is projected to achieve a double-digit growth backed by mid-single-digit volume growth, while the home care segment is expected to report a value growth in the high teens. The oral and the hair care portfolio is growing in the low double digit. Now, overall, the domestic business is expected to post growth in the high single digits. However, the international business is going to perform better, reporting double-digit growth in the first quarter. Now, the key things to watch out in the commentary would be the recovery in the healthcare portfolio, which is also a high margin business, impact of easing raw material prices on margins, market share gains, urban demand trends, and of course, the rural recovery amid all the concerns over El Nino.
Right. Thanks, Asa, for getting us the details. We will watch out for Dabur in trade. But moving on from the pharma pack, you have Lupin as well as Sun Pharma that will be reporting earnings. In fact, pharma as a sector has been in focus over the last couple of trading sessions. Few of the names in yesterday's session on Nifty 50 out of the 6 or 7 counters which saw an up move were from the pharma pack. Monal is standing by to give us more in terms of what could be on the cards from a Lupin as well as a Sun Pharma. Monal, over to you.
Morning, Hiral. For Sun Pharma, the expectation is a good net profit at 2,000 odd crores on a revenue of 11,700 crores. This is the Bloomberg expectation, and it's pegging the margins at 25.47. Now, the idea is that Sun Pharma's US subsidiary Taro, which announced its results last week, reported an increase in its revenues quarter on quarter, but its margins saw a dip. This was mainly on account of the gross margins seeing a dip and a one-time charge of $6.2 million. Now, Nomura says that it's expecting a flattish US sales quarter on quarter with higher specialty and higher Taro revenues, but lower US generic revenues. Also, a 10% growth on the domestic front and an 18% rise in expenses year on year, owing to higher R&D expenses. So that's the overall expectation for Sun Pharma. For Lupin, the consensus estimate says that it's expecting a profit of around 260 crores on a revenue of 4,440 crores. EBITDA margin to be coming in at around 15.4%. However, Nomura is expecting a slight hike in the margins at around 18%. It's saying that there's a Q-on-Q recovery that's expected because of a US launch of a generic version of a medicine called Prezista, which is under exclusivity. Also, there can be a milestone payment, a one-time milestone payment that could come in for around $52 million for Abby. It's made also, of course, as we spoke last week as well on the show, Lupin's made some progress on the warning letters that were on its Goa and Indore site. So there should be some positivity around it as well.
All right, just confirming that was 25 million, the payment? Or was it 52 million?
No, $25 million.
$25 million. All right. Thanks so much, Monal, for that update. Let's continue to focus in on earnings. We've got Eicher Motors to focus in on next, and Vinay is joining in to give you some perspective there. Vinay, clearly talking point is going to be on Royal Enfield, of course, but on the headline numbers, what are you expecting?
So Bloomberg's consensus estimates tell us that the profit is going to jump 39%, and this is on account of higher sales, both on the Royal Enfield sales that we see in the two-wheeler front, and the commercial vehicle sales that they sell through VE Commercial Vehicles, that is their joint venture with Volvo. So the 39% jump in net profit also means that because it is coming due to the higher sales, that means that sales will also be rising 21% due to the same reason. There is a in the margin of 1 percentage point to 24% compared to the last year's 25%, and this is maybe due to the higher share of Hunter 350, which is a more accessible product in the company's portfolio. So that might be bringing down the margin a little bit because it is the most cheapest product in the company's portfolio, and it has been launched last year only. So the share of sales of this particular product has risen in the overall sales. So that might be the reason that the margins are coming down. And as you see that Royal Enfield sales grew 22% on the year-on-year basis, and the commercial vehicles rose 12% to 19,500 volumes. So an interesting thing about Eicher Motors is that this quarter has seen a lot of launches from Bajaj Motors, Bajaj Auto, and Hero MotoCorp. So that it will be interesting to see what the management has to say about the rising competition and how they are going to survive under this pressure from the other OEMs. Back to you, Alex.
Thank you, Vinay, so much for getting us the details. I think everyone is eyeing as to how Bajaj Auto and Hero Moto will actually take away some bit of market share from a Royal Enfield. But obviously, no one can stop them from being the market leaders. But moving on, a lot of other stocks that are in focus on the back of a new news coming in and not earnings. Himansh is standing by to take us through a few of them. Himansh, what do you have in store?
Hi. So yes, besides the earnings, there are a lot of key developments to watch out for. Firstly, we have Ramkrishna Forgings, which has formed a joint venture with Titagarh Rail Systems to form a joint venture, which is going to be called Ramkrishna Titagarh Rail Wheels. The company will jointly manufacture and supply forged wheels under a long-term agreement, which also falls under the Atmanirbhar Bharat scheme. The shares of the joint venture have been subscribed at a price of ₹10 by both companies, with a 50-50 equity split across the both of them. Then we have Torrent Power, where the company has incorporated its arm, Torrent Green Energy, to undertake the renewable electricity generation business. They have authorized a share cap of 5 lakhs for the company, which is yet to commence its operations. The arm will carry on the business of generation, transmission of all sorts of electrical power and energy. Then we have Ultratech Cement, where the company has inked a pact to acquire 26% in VEH Radiant for rupees 15.1 crores. The acquisition is to meet the green energy needs of the company and also comply with the captive power requirements. So they have already signed a share subscription and shareholders agreement, as well as an energy offtake agreement with VEH Radiant Energy, and the acquisition is set to be completed within 180 days following this. Then we have Unichem Labs, where promoter Prakash A. Modi has sold 33.4% stake for around 945 crores to IPCA Laboratory Labs via a block deal mechanism. IPCA Labs has made an open offer to public shareholders to acquire another 26%, and the open offer aggregates to around 800 crores. Then we have JSW Steel, where the company has signed a joint venture deal with Japan's JFE Steel to produce cold-rolled grain-oriented silicon steel for a cost of around 5,500 crores. Then we have Ambuja Cements, where the company...
One thing on Himansh, Ambuja Cement I would want to add is they've just come out with a notification indicating that Ambuja Cement has acquired Sanghi Industries, and this is coming at an enterprise value of around 5,000 odd crores. I think 56 odd percent, Alex,
56.7%
is the stake purchase.
So, and the additional part is that in the run-up, there were a few source-based stories that came out that suggested that the entire promoter stake would be taken over. That is over 70%, closer in fact to 73% or 72 point something percent of the promoter. It seems that the entire stake is not going to be acquired, but at the same time, you should expect an open offer to be made for the public shareholders.
And in fact, they've said that the acquisition will be fully funded through internal accruals. Sanghi, overall, from a capacity perspective, they have a clinker capacity of around 6.6 MTPA, that is million tons per annum, a cement capacity of 6.1 million tons per annum, and limestone reserves of around 1 billion tons. Now, apart from that, what they've said is that SIL's Sanghipuram unit in India, that's the largest single location cement and clinker unit by capacity, with a captive jetty and captive power plant. With this acquisition, Ambuja cement capacity will actually increase to 73.6 MTPA. And Ambuja, as we know, has given out a goal of getting to a capacity of almost 140 MTPA by 2028. So because of this acquisition, this target will be achieved much ahead in time as well. Overall, their aim is to make SIL the lowest cost producer of clinker in the country, and Ambuja will increase the cement capacity at Sanghipuram to 15 MTPA in the next 2 years. So clearly, overall, this is going to be an interesting one to watch out for in terms of Ambuja Cement as well. In fact, I'll thank Himansh for getting us the details and interrupting his Ambuja Cement bit of it, but clearly a positive news for Ambuja Cement, and you could see some positivity in today's session.
No, certainly. In the larger context, of course, we know that Ambuja and ACC now comprise the second largest. Ambuja essentially comprises the second largest manufacturer of cement in the country after Ultratech, and this acquisition will take it closer to that capacity. Of course, Ultratech closer to 130 million metric tons of capacity in a year, whereas Ambuja has about now close to 70. What did we point out? 76.
76. Yeah, and with this, I think let's try connecting with a lot of cement analysts as well to understand, what would this mean actually for the industry in terms of competition, in terms of capacity, as well as the expansion with regards to various geographies. So this is going to be an interesting move for the cement industry.
And we will be catching up with the management as well to try and understand what the rationale of this acquisition was and the use of the strategic assets that you just pointed out, the captive port as well as the power unit, and also the ability to bring limestone straight to the clinker unit. All of these factors have to be watched very closely. But this is a wrap on this edition of Trade Talk.
And just before we wrap, Janani was standing by to get us more details on the online gaming. I think we are running out of time, but watch out for Nazara and Delta Corp pretty closely in trade on the back of the GST outcomes and clarifications that have come in from the meeting yesterday evening.
That is a wrap on this edition of Trade Talk. Thanks so much for tuning in. Do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.